Arun Maheshwari, Joint MD and CEO, is with us. JSW Infra, remember, is a port-related infra company. The IPO is underway, and we did see the IPO getting subscribed 43% on day one. The retail investors portion was oversubscribed at 1.4 times. It's a 2,800 crore rupees IPO, which comprises all of fresh issuance. There is no OFS component right here. The price band is 113 to 119 rupees per share. Mr. Maheshwari, good morning to you, and thank you so much for taking the time out for this discussion on Business Today TV. Sakshi this side, and with me is my colleague Shail Bhatnagar. We'd like to understand a little bit more from you on the business outlook for your company as well, and especially on the IPO. First off, if you could tell us, give us a breakup of the 2,800 crore rupees that you are raising. How are you planning to use it, and what will be the portion that will be used to pay off certain debt, and what will be used for, say, expansions and working capital?
Sure. Thank you for taking us in. And out of this 2,800 crore rupees of the IPO size, about 1,200 crore rupees goes for the capex planning. There are certain capex which are defined in the RHP. I think we are doing one of the LPG terminal. We are upgrading our container terminal, and there are some smaller capex over there. So out of 2,800, 1,200 goes into the capex. About 880 crore rupees goes towards the payment of debts, which are FCNR. And balance 700 crore rupees would be towards the general corporate purpose. So this is how the 2,800 crore rupees is distributed.
Mr. Maheshwari, good morning and welcome to Market Today on Business Today Television. There are two things. One, I must congratulate you for having an IPO in which the entire proceeds will be going to the company. We have over the last 3-4 years been buffeted and how should I say pained to see a large part of the IPO being an offer for sale and many IPOs actually being offer for sale. So our very sincere congratulations to you where the amount of money raised from retail investors will go into improving the company and making it bigger and bigger. So whoever has advised you this, and to your management and to your board, our congratulations for this particular step. Also, the pricing is very reasonable given the fact that we've seen absurdly priced IPOs coming over the last 2-3 years. Tell us, sir, how is the business? Where do you see cargo coming in at a greater speed, either on the western side of the coastline or the eastern side? And where is the maximum expansion targeted?
Okay, I'll just take you through one of the key areas before we get into your specifications. I think, this sector, particularly if you look at India, India's total cost of logistics is about 13 to 14% of the GDP, which an economy of our size and scale, if it has to grow further, it should be reduced to single digit. Now, government has been very mindful of it in the last 4 or 5 years budget. If you see, a lot of investment has been targeted towards the development of infrastructure, largely to reduce this cost so as to we remain competitive in the international arena. So now, as a sector, the country has a complete focus. An economy of $4 trillion, it has to go to say $10 trillion in another 5-10 years. It cannot happen without developing its shores. 95% of the EXIM volumes are through seaports. And in India, which is a sunrise industry in India, it's just about 25-30 years old industry. Before that, only government was managing and operating the ports. So very few players are there in this sector. There are high entry barriers. You need to have a very deep pocket, good balance sheet, strong management, and very, very good governance structures in place. Otherwise, survival of this any company in this sector is quite challenging. If you see, only 2-3 players are there pan-India today. Otherwise, there are only regional players over here. Now, having said that, if we see the cargo volume growth in India, it is phenomenal. As a port sector, it is going about 4 to 5%. But the way whenever the economy takes turn, the first sector which gets the boost is the infrastructure sector. And infrastructure, whether it's a railways or roads or ports or anything else which is connected to delivery or receipt of services, are the ones which are getting impacted. So this is a sector wherein the investments will be required huge. If I had to, look at total India's capacity is only 2,600 million ton. Imagine
Okay.
a 7,500 kilometers of shore length on, and only 12 major ports and 35 or 40 minor ports, functional minor ports are there. So this offers a great opportunity for companies like us, which are into this business pan India, second largest port sector company on the commercial side in India, and one of the largest on the terminal side of government ports.
So I have a two-part question for you. The
Yeah.
first part being, how have the volumes really shaped up for you in the first half of the calendar year? And of your entire cargo volume, the second part of my question, how much really comes from the group company, JSW itself?
Okay. Okay. I'll just answer this. Our cargo volume, if I have to take like 3-4 years journey, if I have to take, it was close to about say 45 million tons, thereafter 63 million tons, thereafter 93 million tons. FY23 was 93 million tons. And quarter one of this year, that is June 23, has been 25.42 million tons. So it's a continuous growth over there. Now, the total capacity of the company is about 158 million tons. And the utilization as on June, if I have to look at it, it is 63%. So utilization has been growing up ever since. Before 63%, as on March 23, it was 57%. Before that, it has been like 45%, 35%, and so on. So the utilization is going up. The cargo volume definitely is going up according to that, and the capacity is almost about 158 million ton as on March 23. Now, coming to your second part of the question, how much has been the group company? I'll just take you back on this 2004 when we started this company. This company essentially started to cater to the supply chain requirement needs of JSW Steel and Energy, because these are process-driven industries. So they would like to have a control on the supply chain. And that's where the genesis of this company started in 2004. Until 2018, we were handling only group cargo. That's why we were never into the radar of anywhere outside. 2018, we realized, okay, this is a good sector to be in. We have already invested in part of the assets. Why not we sweat the assets? We can cater to third-party customers. And that's where the investment intention and the direction for the third-party business catering started. 2018 onwards, most of our investment has been towards the development of the third-party business. In fact, in 2019, when we were doing 35 million ton of cargo, only 6% was outside the group. 2023, we ended with 93 million tons of cargo, out of which 33 million tons was outside the group. So the journey has been very fantastic on the third-party growth business. From a sheer 3 million ton volume, we did about 32 million ton volume as on March 23. And current quarter of June 23 quarter, we are 37% outside the group. So the good part for us is that, our group companies are growing extremely fast.
Right.
Be it JSW Steel or Energy or Cement. So their growth are extremely fast, and we have to keep a pace with that and make a room for third-party business also, which is a good problem to have. So we are blessed to have those companies as our group anchor customers. And
Mr. Maheshwari?
Yeah.
Right, fair point, sir. I was looking at your FY22 numbers compared with FY23. The revenue has grown up sharply to about 3,372 crores versus 2,378 crores. But the PAT, profit after tax, has more than doubled to about 750 crores in FY23. From 330 crores. How has this happened? You are a infrastructure company that moves commodities. How come profit has more than doubled?
So basically, there are two factors into it, because we have an FCNR loan as well as a bond in dollar bonds. There are about $400 million bonds out there. So this year onwards, we started doing the India's kind of entry. So there has been an exchange gain into that, so which has been accounted. On top of it, our interest cost has dropped dramatically. And also our utilization of the assets has gone up dramatically, like from 45%, we have gone to 57%. So that increase of utilization definitely added to the top line as well as the bottom line both. On top of it, our interest loss going down as well as our India's entries has made it this way. So I think going forward also, we will be able to maintain this kind of healthy PAT.
Okay. Just last.
Mr. Maheshwari, I'd like to focus on the debt part again. How much of FCNR are you paying back, and how much of reduced interest cost will you see in the coming quarters? Is the FCNR being replaced with another debt, or is it going off the balance sheet?
It is going off the balance sheet. It's about $110 million US, which will be repaid, which will be prepaid now. And the only debt sitting in the books after this IPO would be $400 million US bonds, which is at 4.95%, a bullet bond to be paid in FY29. So that will be the only debt remaining in the balance sheet post this IPO.
Okay, so last question from my side would be on the capacity. What is your current capacity at, and what do you foresee it growing to now? If I ask you about 1 or 2 years outlook, how would we see that growing to now?
So, but our current capacity is about 158 million tons across all the locations, be it port or terminals. Going forward, if I had to look at it, it is difficult to put a number per se, but then I will just explain the opportunity what it is. Today, 50% of the port capacities of India is owned by Government of India, about 1,400 million ton.
Yeah.
And Government of India is very clear that they have done enough for the country by investing and operating this port for the last 6-7 decades. Now they would like to go into the landlord model, and they are inviting private players like us to mechanize and modernize those terminals. So every month we are seeing some opportunities coming up for bidding for mechanization and modernization of terminals. Very few players are there in India to take over that. And most of them we have seen regional players over there. We see this as a great opportunity. Imagine 1,400 billion, 50% of the India's port capacity coming up. Even if part of it comes up for auctioning in coming years, it throws a huge opportunity for people like us who have a decent balance sheet, ambition to grow, and attitude is there for growing. So I think this throws a good opportunity. On top of it, we are going for brownfield expansions. We are also going for some kind of greenfield ports as well. So all put together, I think we have been able to maintain 22% CAGR for the last 20 years on the volume front. Now the base is very high. Our intention is to maintain that kind of volume growth or CAGR basis. So it depends upon how much terminal we win in the bidding. But given the track record, given the amount of terminal we still hold in India, I think I see a fairly good chance that we will be able to make it big in the coming years.
Right. Mr. Maheshwari, our last question to you. What will be the promoter stake after the IPO dilution?
So this is about 11% kind of dilution as of now. So about promoter and promoter group holding would be close to 85.5% post the IPO.
That essentially means that over the next 3 years, you will be again forced to dilute about 11%, because that's the SEBI norm for listed companies where promoter stake cannot exceed 75. So there's more dilution in way.
As per regulatory norms, we'll have to dilute up to 75% minimum.
Right. With that, Mr. Maheshwari, we'd like to thank you. And again, a very sincere and heartfelt congratulations to what has been one of the rare IPOs in Indian stock markets over the last 4 years, where the total IPO is something which will go
into the company.
To the company for expansion, payment of debt.
True.
Thank you so much, sir. And
thank you, Mr. Bhatnagar.
We hope the best to you.
Thank you. Thanks for receiving us.
If you like the video, do like, comment, share and subscribe.